Good morning, everyone. Welcome to the New York State Senate's Banking Committee hearing on MWBE lending practices and access to capital. I am joined today by one of the committee members, Senator James Sanders. We expect that we will be joined by other members of the Senate as they arrive in Albany after the long weekend, and Senator Hamilton, who is the ranker, should be here at some point. And we also have joining us a member of the Assembly, Assemblywoman Rodneyce Bichotte. She is the chairperson in the New York State Assembly of the, I want to make sure I get it correct, Assemblywoman, the Subcommittee on Oversight of Minority and Women-Owned Business Enterprises. So this will be somewhat of a joint hearing, and we look forward to taking testimony from several people who are here with us today. But essentially, we're here for the purpose of examining access to credit and capital for MWBEs. As we all know, New York State has a goal of 30%. I'm distracted by the staff member here. We have set a goal of 30% of New York State's business to minority and women-owned businesses. New York City has some goals that we try to make sure get met. But what we hear over and over is many of the MWBEs don't qualify for the contract, so they're not able to participate. And one of the reasons is they don't have access to capital and credit, and we go around in circles. In fact, last week, the Senate Labor Committee held a hearing on the issue of prompt payment in the construction industry and the effect that it has on subcontractors. And that problem, which we are trying to address, has had a specific and particular problem on minority-owned women and business contractors around the state participating in large construction projects. In fact, we heard horror stories about one or two of them that were forced out of business. So this is a real problem. We would like to take a look at it, figure out where the stumbling blocks are in access to credit and capital, and what we can do to work together to improve that so that the state can meet its goal. 30% is the minimum. We would like to see even more. So with that said, Senator Sanders, do you have any opening comments you'd like to make?
Thank you, Madam Chair. This is a very important hearing that we're going to do today, one that I take great pride in as a father of MWBE in New York City, Local Law 1, Local Law 129. I understand that access to capital is the stumbling block here, the main stumbling block. It's a chicken and the egg situation where it is said you can't get a project unless you have capacity, you can't get capacity unless you have a project, and access to capital is the issue. So I'm glad to be at this hearing. I will do everything I can to support you and the worthy efforts here, and I see some of the stars of all of these fights, including Bertha Lewis here. So I'm looking forward to going through this and learning from the presenters as we struggle to make it a more just society in New York State. Thank you very much.
Thank you, Senator Sanders. Assemblywoman Bichotte.
Yes, thank you. Thank you, Senator Savino, for putting this hearing together and welcoming the other side, the People's House here. Thank you. It's a pleasure to be here, joined with my colleagues in government, Senator Sanders, who, as he mentioned, the father of MWBE. I'm delighted to see all of you here addressing this issue. Bertha Lewis, again, love her. She's been really on the ground on attacking how we can work with funds that we have already from the banks, a pension, our controllers in promoting opportunities to reach that goal of 30%. As the chair of the Oversight Subcommittee of MWBE, my goal is to listen to the testimonies of our subcontractors, our small businesses, prime contractors. As we know, there's a big challenge in reaching those goals, and primarily it's because many of our businesses are in a situation where there's barriers that's preventing them from growing. And one of the main things is getting access to capital, lending programs, and for a very long time, there's been a huge disparity due to exclusiveness, discrimination in lending money or just even having resources available to small businesses, in particular minority and women-owned. In addition to that, we know there's a situation in how can we set resources aside to outreach and let these businesses that are available, willing and ready to work and be contractors, know the programs that are in place. Right now, I know the city and the state are putting funds together, but it's not enough. I know the city of New York, I put a 10 million fund lending program. That is not enough. We have just in the city of New York, over 4,000 to 5,000 certified companies. $10 million will not be enough. There's a 10 million bond program. That's not enough. So we want to hear what's going on in the industry. We want to hear your testimonies. And we're here to help you, actually. We're here to help you in finding ways, whether it's by way of legislation, policies, and guidelines, to put things in place so that there's resources, funds, and so forth available. And again, I really am very excited that we're having this hearing to address this issue that's being somewhat controversial. Don't know why, but it's a good thing, because as we expand economies in communities, especially communities that are deprived or where unemployment is high and the workforce are typically ignored, it would help our overall economy. It would help our neighboring communities and so forth. So we got to keep that in mind. We're trying to find a way to be inclusive in sharing the piece of the pie, in contracts and so forth. Right now in the city, in the state of New York, the percentage in the state of New York is 20%, or 23% out of a $7 billion procurement pool. In the city of New York is about 5% out of a $16 billion procurement pool. It's a very small number, and but we're fighting over this little percentage that we're trying to make right. Again, Senator Diane Savino, I want to thank you as the chair and head of the banking committee for putting this together, and we're looking forward to hearing your testimonies. We have a lot of questions for you too, and thank you so much.
Thank you. Thank you, Assemblywoman. Our first testimony is going to be from Patrick Mackrell of the New York State Business Development Corporation. They're here to talk about what their goals are, how they assist and promote and work through their cooperative efforts of their lending partners to help advance this agenda. So take it away, Mr. Mackrell. Mackrell, right? Is that how you say it?
Mackrell, yeah.
Mackrell?
Good, yeah. Excellent. I've heard it pronounced much worse. Well, good morning, and thanks very much for having me here today. As Senator Savino said, my name is Pat Mackrell. I'm the President and Chief Executive Officer of the New York Business Development Corporation and its affiliated companies. We have 8 offices in New York, staffed by 100+ employees. NYBDC was formed in 1955 pursuant to Article 5A of the banking law of the state of New York to facilitate small business lending by providing a means to shift the risk of loss for certain types of small business lending to NYBDC. Our formation recognized the need for an alternate lending solution for those credit applications that did not fit within conventional approval criteria. The members of NYBDC support its operations through loans, which support the working capital we need to make loans. In fiscal year 2016, which is our current fiscal year, 118 New York State member banks committed more than $68 million to NYBDC to support its lending operations in New York State. NYBDC represents a privately funded solution to access capital for small businesses and enjoys very significant financial support from New York's banking community. It is a unique entity which serves as a primary delivery vehicle for traditional banks in the alternate lending space. We also receive loan funds pursuant to a loan agreement with the New York State Common Retirement Fund, with direction that at least 25% of those loan funds be used to fund loans to MWBEs. The New York State Common Retirement Fund has been a consistent supporter of our programs and a champion for small businesses seeking access to capital on affordable terms. with long-term fixed rates. This very successful relationship with NYBDC dates back to 1988. While our resources are not unlimited, at any given time we have more than $200 million immediately available to support our small business lending, $2 million in privately sourced funds, which can be increased on request to our funding partners and multiplied by the application of various guarantee and sales strategies. Funding is not an issue for us. As an alternate lender, our mission is to promote access to capital for New York small businesses that are unable to secure conventional loans on reasonable rates and terms. We make loans to startup, early stage, and mature businesses to support operations and growth. We are active lenders under a variety of state and federally sponsored loan programs and have a managed loan portfolio of over $1.3 billion. Our loan amounts range in size from $25,000 to $5 million. More than 20% of our loans are to startup, which would mean no historic revenue whatsoever, or early stage, which would be businesses under 2 years in operations. And more than 30% of our loans are to minority or women-owned businesses. 20% to startup or early stage businesses, 30% to women or minority-owned businesses. We recently collaborated with the New York Bankers Association to form a small business emergency loan fund in response to Hurricane Sandy and loan more than $18 million to 797 small businesses. This was a private solution crafted by the banking industry, which we administered. Our first loan was advanced within weeks of the storm, and we continued to advance loans over the following months until New York City and New York State loan programs, both of which were supported by the HUD, Community Development Block Grants from the federal government, were available and on the scene. We continued to manage the New York City Emergency Small Business Loan Program. We also managed the Small Business Grant Program established by the Mayor's Fund to advance the City of New York. Unlike a traditional corporation, our enabling statute prescribes the composition of our board, and in addition to directors elected by the members and shareholders, the legislation provides for directors to be appointed by the governor, as well as the leadership of the New York State Senate and New York State Assembly. The New York State Economic Development Commissioner is a member of our board on an ex officio basis based on the enabling statute. As a rule, most of the loans that we process and fund are referred to us by lending partners that understand our willingness to consider loans that challenge traditional underwriting. Just in the last fiscal year, looking at the members of, excuse me, madam, I only included the members of the Assembly, we made loans in the last fiscal year to 122 small businesses located in the districts represented by the membership on the Senate Banking Committee. Many NYBDC's borrowers lack historical track records and demonstrated cash flow. These borrowers generally possess a higher risk profile than a traditional lending customer. Our expertise in analyzing risk, structuring repayment, establishing collateral requirements, careful and attentive servicing, and maximizing the use of mitigants available through state and federal loan programs has served us well. Our goal is to stretch the credit box to, but not beyond, prudent lending standards. We seek to serve businesses that are creditworthy. In other words, we approve loans to businesses that can be expected to pay a loan from historic or reasonably projected cash flow, and to structure repayment in ways that are likely to improve the likelihood of repayment, such as interest-only payment, extended amortizations, periodic payments, seasonal payments, payments deferred until receipt of payments on perhaps on state or federal contracts in process. In other words, try to tailor that loan to improve its likelihood of success. I am in agreement, I am familiar with the Black Institute's report. I am in agreement, sadly, with the finding that of the Black Institute there are serious obstacles to obtaining credit that are unrelated to creditworthiness. But I see the issue as a little more multifaceted. It is clear that small business lending was impacted by the Great Recession and that it has not recovered at the same pace as other commercial lending. It is also clear that lending to minorities has been particularly impacted, and the recovery in that area has not been as robust as recovery in other areas. From our perspective, we see a number of different causes, to which I will offer a number of different solutions. Overall, demand is down for all types of lending activity. Small businesses are reluctant to seek capital to start and grow if they are not convinced the venture will be successful. Clearly, the economic gloom brought to us by the Great Recession has impacted small businesses to a greater extent than the overall economy. Reluctance to invest springs not only from an uncertain economy, but also a very keen awareness of the burdens of government that routinely impact New York State small businesses. This is generally ranked by New York State small businesses as a much bigger impediment to success than access to capital. Degree of difficulty. Small business lending done properly is not for amateurs, and it's often more difficult than making large loans to established companies. Most small businesses do not have the benefit of top professional assistance, legal or accounting, that larger businesses enjoy. Lending to support startups or expansions must be based on projections. The fundamental issue to be resolved in the underwriting is the small business's ability to repay the loan as and when agreed from the revenue generated from over the course of normal operations. I thought that you may, in terms of some of the wilder chances that we've taken over the years, I'll depart a little bit from my testimony. And some of you may recognize some of these companies that were pure startups, but to minority or women-owned businesses. Buffalo Boss in Brooklyn and Harlem, startup wing manufacturer, MWBE business. Blue Marble Ice Cream, if you've been to the Barclays, you've enjoyed Blue Marble Ice Cream. Startup, pure startup, not a penny of revenue generated before those two women put together that business. Some of you have been around for a little while, may recognize a name who was, I think, a Brooklyn icon, Gilbert Rivera. Gilbert Rivera received his startup capital from NYBDC. Others, I'm sure all of you will recognize this name, a minority, an immigrant that received the startup capital for its business from NYBDC, Chobani Yogurt. You might also recognize, if you've been around Times Square, a little kiosk run by a gentleman from Argentina, Ariel Babuth Nuches LLC, where if you enjoy empanadas, that's a great place to get them. These are all startups, all enjoy some degree of success. Every single one of them was a minority or women-owned business. Not a single one of them had a penny of historic revenue when they sat down with us for the first time. Some of them are still struggling. They're not all massive successes, but they all sat down and sat with us based on projections, a well-thought-out business plan, dedicated and determined management, and our capital made a go of it. The other thing that we are seeing tremendous difficulty in the MWBE space, quite frankly, and in the small business space generally, is that as the burdens of government increase, we have a sense that the gap between reported revenue, in other words, revenue verifiable with reference to a tax return, and actual revenue is growing, effectively ring-fencing of portions of the company's historic revenue, limiting lending decisions to that which can be serviced by reported revenue. We repeatedly and quite often see lifestyles support that appear to require much more cash flow than is being generated by the business that is supposed to. In other words, in many cases, there appears to be no visible means of support between lifestyle and business operation. We saw that particularly challenging in Sandy, when many businesses, we could obviously tell from the credit scores and the personal wealth of the principals that the business had been successful. We could not tell that necessarily from looking at the tax returns of the business. So that disconnect between reported revenue and actual revenue is something we struggle with as a small business lender all the time. Perception. We found that many small businesses believe that they will not be able to access credit on conventional terms, so they simply don't bother to apply. There appears to be a significant disconnect in the space, with conventional lenders complaining about lack of demand, while small businesses complain about lack of availability. In my observation, the principal and predominant reason why small businesses do not get a loan is because they do not apply. They act based on belief and perception and anecdotal evidence that they will not apply, and they do not pursue the process. Small business, there's a risk component which should be obvious to all of us. It certainly is obvious, I think, to the members of the committee. Small businesses typically have weak, highly leveraged balance sheets which provide little margin for error. Relatively small disruptions can have a huge impact on the small business and its ability to service debt. Small disruptions, as you mentioned, Senator Savino, in terms of anticipated payment from contractors, whether they be state, federal, or private landowners. Small disruptions in that can have great impact on an MWBE with a weaker balance sheet. This is all compounded if the initial lending decision was based on projected revenue rather than historic revenue. So having sort of looked at the problems and the issues and the perceptions, how do we better serve those MWBs? What do we do to change the dynamic a little bit? I think we focus on the right problem is the first place to start. The right problem is not access to capital for all MWBEs. The right problem is access to capital for creditworthy MWBEs. By creditworthy, we mean not just simply historic revenue, but small businesses that are able to pay projected debt service and other operating expenses based on their projected revenue, so that there are lenders in the marketplace that are willing to deal with businesses in startup and early stages. I think the most important aspect of this is connections. Businesses need to be connected with alternate lenders through some sort of consistent effort. A directory perhaps organized on a statewide basis or even a regional basis that describes risk profiles, eligibility requirements, lending rates. The directory could include historical information that would inform the small business in the process of seeking capital, and also serve as a resource for conventional lenders and others seeking to provide assistance to small business beyond what can be offered in their institution. We did a similar directory in New York City with cooperation of the New York City Small Business Solution Centers in the aftermath of the commencement of the Great Recession. What we did is summarize in that resources, alternate resources, what the appetites for risk were, things like very basic stuff. What's the credit score? What's the eligibility requirement? How many years in business, if any? Do you do startups? Do you do early stage? What's your percentage of lending to minority? What's your percentage of lending to women? We did that at the request of Congresswoman Velasquez, then Speaker Quinn, and other members of New York City Small Business Services, produce a directory that could be distributed to small businesses and other resources through banks that would provide lists of lenders with an appetite for risk that may have been the outer edges of the box. Importantly, it can include information about historic information about women and lending to minority businesses that can help break down some of the perceptions that loans cannot or will not be granted. In each case, we should talk about including information for 3 annual periods, average interest rates, number of loans to startups or early stage businesses, number of loans to women-owned businesses, average loan size, type of loan, average loan term. Government at all levels should seek to make connections in effective ways to seek and measure impact, not just output. Many of you, and many members of government, can make this happen by organizing small business events in your district and encouraging your colleagues to do so. The New York State Comptroller recently sponsored an MWB Access to Capital event in cooperation with the Brooklyn Chamber, which we participated in. And that was particularly effective in making connections between small businesses, most of them, it was MWBE focused, capital providers, and technical service providers, entities that would help with business plans, help with identifying sources of capital that would be appropriate. I would applaud Assemblywoman Bichat's article here. I noticed that there's resources, and this carried to a greater extreme, these rely on state agencies, for instance, to provide information about this. Empire State Development, for instance, has a terrific program called Bridge to Success, which is an MWBE program designed to provide mobilization capital to MWBEs to perform contracts with state, federal, and quasi-governmental agencies. That program provides, as I said, mobilization capital. It's a relatively new program, but it's been effective as one of the 4 providers of the program through the state. In relatively short order, we have provided gap financing or mobilization capital financing to 11 MWBEs, which facilitated their performance of more than $8.4 million in contracts. Many of these MWBEs we have made multiple loans for AME Electric, for instance, which is a minority-owned electrical contracting firm in Syracuse, New York. We have made 5 separate loans to that company, each to allow them to mobilize to perform a particular contract, most cases with the New York State Dormitory Authority, but all for state contracts. That program is a terrific program which could be highlighted as a way for minority and women-owned businesses to gain access to that critical mobilization capital. And it's a terrific program because not only does the state support it with a loan loss reserve to induce us to do it, but it also makes the connection for us as the lender with the government agency. So those proceeds are, the only risk that we're really taking is performance risk. We're not taking payment risk. The contracts are assigned, and those are allowed so that they are able to continue. And with each case, the beauty of this, with each case that we do with AM Electric, each loan requires him to borrow a smaller and smaller percentage of the mobilization capital because he's retaining profits in the business, and that is seeking to do exactly what he wants to do, which is to grow the business. New York state-sponsored programs, as I said, maintaining them. The Capital Access Program, also administered by ESD, is an excellent program for early-stage businesses, and the Bridge to Success, which I've talked about. We have loan funds from the state of New York, the Small Business Revolving Loan Fund, which is a result of the state credit initiative from the federal government, which was post-2009. All provide, increase the capacity and appetite for small business lending. Those are particularly important programs not only because they expand the credit box by providing collateral support, but also promote awareness of alternate programs available to MWBEs. Supporting creative solutions. Our affiliate Excelsior Growth Fund relies on the support of the New York State Capital Access Program to mitigate the risk of loss in an online lending program. In response to our belief that small businesses in New York were being poorly served by in the online lending space, we began operating an online lending program in August 2015, which has been endorsed by both the New York Bankers Association and the Independent Bankers Association of the state of New York. The Excelsior Fund's Growth Fund Smart Loan Program provides a fast, transparent, and predictable online solution at reasonable rates and on reasonable terms, with loans structured to promote the long-term sustainability of the business, and is supported by business advisory services, which are provided to the businesses at no cost. Small businesses that come and borrow from the Excelsior Growth Fund at no cost have access to top-flight web designers, business developers, financial services, all at no cost, and supported by grant funds that we've been able to garner from various sources to allow those businesses to accelerate and grow and sustain their operations. We are particularly proud that our online program seeks to combat some of the perceptions because it is completely and utterly colorblind. It's decided automatically based on 5 key metrics, which are fairly, we've turned the hair of many a conventional banker white in terms of the metrics we've identified for the box, but we've been very successful in that program, particularly since we've been providing intensive technical assistance to those companies. Referral activity. Encourage referral activity by conventional lenders and other charged with serving small business. Banks should not stop at a declination or a discouragement. There should be embedded in the system the ability to streamline referrals to entities that are likely to provide an answer, that are likely to provide an outcome. We need to encourage the recognition of a referral activity to alternate lenders as important investments in community where the referring bank operates. Encourage second look programs that expose the MWB applicant to alternate lenders that can provide a meaningful solution. This is not an issue solely with traditional lenders, but with alternate lenders as well. Too often alternate lenders perceive competition among programs and fail to cooperate in meaningful ways that promote success for the broadest spectrum of opportunities for small business. The next aspect is that, is it anecdotal or is it actual? Much of what is said about access to capital for MWBEs does not reflect their experience with alternate lenders. More work should be done on identifying the gap and less reliance placed on anecdotal information. How many MWBEs applied for a loan? How were the loans decisions? If denied, why? More information and data needs to be developed on that to determine what's the appropriate course of action. Strategic business planning is another area where the state has been particularly supportive, particularly through the New York State Small Business Development Centers and their support of those. Lenders and those who come in contact with small businesses must encourage them to seek out and take advantage of all available resources to assist with the type of planning necessary to sustain the business in difficult times and be poised to grow when the opportunity presents itself. I'm not Pollyannish in this regard. I realize that many of the small businesses that we deal with and that perhaps you hear from spend 25 hours a day trying to make ends meet. And they don't often have time to sit down and learn about QuickBooks or financial presentation. And the answer is, I can't get to it. And if you can't, and our position is, if you can't get, we need to find time for you to get to it. We need to find education that's accessible. We need to show you and teach you how to present your financial information, how to understand your financial information, how to use your financial information to advance your business, and how, more importantly, to use your financial information to make decisions about your business, to see out whether you've been successful in a particular project. While each of these observations are important in terms of expanding access to capital, I think, and in closing, the most important would be the identification of alternate lenders that are actually addressing gaps by making loans to creditworthy small businesses that cannot be obtained from conventional lenders. I cannot overstate the value of government's cooperation in this area, the value of government simply hosting events, members of the legislature, members of Empire State Development, hosting local, regional events that expose MWBEs to sources of advisory services and to sources of capital that are primed and ready to serve MWBEs at all stages of development and understand the challenges that they may face, particularly with dealing with state or federal contracts, which we discussed earlier. So thank you for your attention and the opportunity to share my thoughts on access to capital for MWBEs, and I'd be happy to address any questions that you may have.